Good morning, honorable members. We're going to start our meeting in 2 minutes' time.
Morning, Chair.
Morning, COC. My time says it's now 10 o'clock. So we're going to start with our meeting. Good morning, honorable members of the Select Committee on Finance, the two Deputy Governor, and the distinguished delegation from the South African Reserve Bank, committee support staff. Let me extend a warm welcome to everyone as we convene for this virtual meeting. It is a pleasure to welcome the team from the South African Reserve Bank officially to this meeting.
Recording in progress.
This is a long overdue engagement, honorable members. As members will recall, this briefing was originally scheduled for an earlier date, but unfortunately we experienced scheduling conflict with a meeting of the Standing Committee on Finance. I'm therefore very pleased that we have finally been able to find a mutual suitable time to make this session a reality today. Honourable members, by so saying, let us proceed with the business of the day. And now request the Secretariat that I'm going to flag the agenda, please, so that we can go to the next item. Can you assist with the apologies? Is there any apologies that can be presented to the meeting?
Good morning, Chair. Morning, honorable members and colleagues. The only apology I received was from Honorable Khatebe, Chair. He is not present today. Thanks, Chair.
Thanks, Secretary. I now invite the South African Revenue Bank. I'm not sure if who's going to do the briefing. Mr. Gaza.
Good morning, Chair.
Oh, Ms. Gaza.
Are you well?
Oh, yes,
Yes.
I'm well and you. Okay.
Good. Thank you, Chair. Chair,
welcome to our meeting. Thank you.
thank you. Apologies from Governor Kganyago. He's unable to join. He's currently attending the annual meetings of the IMF and the World Bank, and also has some G20 meetings on the sidelines. So joining this morning would be myself, Deputy Governor Fundisha Zibana, and Deputy Governor Mampo Modise. So thank you very much for having us. Just to kickstart, Chair, we do have some technical constraints that we need to be helped with, because at the moment we are unable to share the presentation. The system is not allowing us to, so we need someone to be permissioning us to be able to share our presentation.
Hi, Chair. If I may help, yes, ma'am, you can share the presentation now. You have the co-host, right?
Okay, thank you. If I could just ask for a minute while we do that, please. Thank you. So, with your permission, Chair, we do have a presentation that is based on the guidance that we received. Perhaps we can just confirm with the Secretariat just what the committee would like to cover. So we've got an initial presentation which provides an overview of the South African Reserve Bank's work at a high level. We have also provided an overview of key economic developments and the views of the South African Reserve Bank in this regard. And for that, we have got other colleagues who will be joining us for this part of the presentation. Perhaps if I could just hear from the Chair whether that will be sufficient or whether there are other elements that you would like to cover specifically today so that we know what to focus on after we're done with the economic overview. So, Chair, I will kickstart then at this point, just with a general overview of the work of the South African Reserve Bank. I hope I am audible. So the South African Reserve Bank is the oldest central bank on the continent, established in 1921. We derive our mandate from the Constitution, and we were created as a public institution in terms of Section 224 of the Constitution. And therein is where our primary mandate is defined. And in terms of accountability, we account directly to yourself as Parliament. And our funding is not from the fiscus, but revenue generated from our own operations. Just to give a bit more color to our mandate, as defined in the Constitution, our core mandate is price stability. The Constitution talks of protecting the value of the currency in the interest of balanced and sustainable growth. And there often is confusion about what is the meaning of value of the currency. The currency that we talk about, that is referred to here, is the rand in your pocket. So protecting the purchasing power of the rand in your pocket is what translates to price stability. And there, with the guidance of the National Treasury, there is a defined framework in which price stability is executed. And from around 2000, the framework for price stability in South Africa, we follow an inflation targeting framework, and we manage inflation within the inflation targeting band that is defined to be between 3 and 6%. And that is meant to be what anchors inflation. And the stable rand is important for economic growth. So just to talk to the balanced and sustainable growth elements, what is the SARB's contribution is that stable prices in the economy support growth, they support investment, and via the support of investment, supporting employment and household resilience. We do have other statutory mandates that arise. The biggest one in this regard is financial stability. So what is financial stability? Financial stability is having a system that is able to continue and remain resilient even in the event of big shocks. And what the South African Reserve Bank does here is to identify risks and to find ways to mitigate risks that might disrupt the system. Now, when we talk about the system, we're talking about the collection of financial institutions together, the collection of banks, the collection of insurers, the collection of market infrastructures that support market participation. And we focus our work on strengthening the safety and soundness of individual institutions as well, and that is the work of the Prudential Authority. In the end, a stable system also supports investment, protects depositors, and helps the economy in withstanding shocks. Just a recap of how we account via to Parliament. We account to Parliament directly, but also because of work that we have to do via the National Treasury, we cannot draft our own legislation. So our own legislation comes through the Ministry of Finance to yourself as Parliament, and we do have reporting lines, again, via the Ministry of Finance to Cabinet in terms of feeding into the broader work of government as well. So the SARB Act also talks about the SARB doing work ordinarily done by other central banks. So what is the work ordinarily done by other central banks? That includes producing currency, that includes providing certainty around deposit insurance in more modern times, and it does include being banker to government. And in this regard, the SARB does have 4 subsidiaries that support its mandate. We have 2 currency-producing subsidiaries, the South African Banknote Company and the South African Mint. We also have got the Corporation for Deposit Insurance. That is the newest addition to the SARB family, which administers the Deposit Insurance Fund to protect covered depositors if a bank fails. And then we have got the Corporation for Public Deposits. Now, this corporation provides investment services for public sector funds, contributing to liquidity management. So government's cash coordination mechanism currently sits inside the Corporation for Public Deposits, and these are deposits of provinces. These are deposits of some SOCs that sit in here, and the Treasury is able to utilize some of those funds that are these savings as part of bridging finance during the course of the year. So how is the SARB broadly governed? The President appoints the Governor and Deputy Governors. The Governor acts as the chair of the SARB board, and we have got a governance board. And our governance board is made up of 4 non-executive directors that are appointed by the President. We also have got 7 non-executive directors that are elected by the SARB's private shareholders. Now, the SARB is one of the few central banks globally that has got private shareholders, and we have got a cap on the number of shares that individuals are able to hold. So only 10,000 shares are allowable per person or per institution. There is no restriction. So when we talk about these private shareholders and who they can be you or I. You can go to the SARB website if you are interested in acquiring some shares, and you can acquire some shares. Voting in terms of what these shares allows you to is that you're allowed 1 vote per 200 shares. The dividend payment is capped in law at 10 cents per share. And so there is a maximum of only 1,000 Rand that can be paid to shareholders. Shareholders cannot influence policy. As I said earlier, the South African Reserve Bank is a public institution, so shareholders cannot influence monetary policy, supervision of financial institutions, or even what we do in the area of financial stability. And foreign shareholders cannot vote in any decisions. I am now stuck. Thank you. So looking broadly at the roles of what is it that we do day to day at the SARB, we are a learning organization, so much of our work entails research and analysis. We also run the national payment system for the country. So when you go and you swipe your card in South Africa or outside of South Africa, that work that has to happen to enable you to give effect to that payment is taking place as part of the national payment system. We also have a delegated function that we receive from the Minister of Finance, which is around administering the exchange control limits that are imposed by government. We also act as the banker to government. We bank, we issue and we notes and coin. We also execute monetary policy. We manage the foreign exchange reserves of the country. And as I have mentioned, we have a mandate to promote financial stability and to ensure that individual supervised institutions are safe and sound. How do we have public engagement broadly in terms of the work that we do? We have got monetary policy forums, which complement the public statements that the governor has to make at the end of every 6 weeks on, at the end of every 2 months on what are the monetary policy engagements. So twice a year, we go out and we have got engagements with the public on the work that we do as the South African Reserve Bank. We release a monetary policy review, which provides some analytics on developments in the economy, and we explain the decisions of the South African Reserve Bank. The usefulness of these platforms is that we also get feedback from the public on the work of the SARB. Areas that lack clarity, we get the opportunity to clarify also in that regard. We also have a financial stability forum. And this financial stability forum follows the release of our financial stability review. And here we explain all the work that we do that relates to financial stability, the risks that we identify, the mechanisms that we think that the risks can be managed through, are all outlined in this report that is also released twice a year. And both reports are released in the first in the second half of the year, and then in the in the first half of the year, and then the second half of the year, so that we give a broad overview of what has been happening in the country, what are the risk exposures, so you can see changes that happened over time and the decisions that we've made in between. We have talked to the SARB forums that we hold in all 9 provinces. And here we get to engage with business leaders and also the public in different platforms. We have got economic roundtables that we host at the South African Reserve Banks. These bring together economists, academics, and industry experts to deliberate on policy issues that are emerging in country, and they allow us the platform for debate. We host our signature event, which is the MPC Schools Challenge, where the MPC Schools Challenge is twofold. One, it is an avenue for us to build economic literacy among our grade 12 learners, but it does also serve a second purpose, which is give learners a bit of color in terms of what it would take to make MPC decisions. And here the competition allows students to prepare for themselves, and we test their level of engagement and understanding of the work that the MPC does, because they are able to role play as MPC members as part of this competition. We do run a bursary program in the South African Reserve Bank, where we provide financial support for promising students in critical fields of the South African economy. Now, our bursaries are not just for economists, because part of the work that we do also takes us into the fields of data science. Part of the work that we do is also about communication. And so there are broader areas of work where we provide bursary schemes for our students. In 2026, we will be opening our Saab Museum, which will be a new public-facing space for education and also a means for us to capture the heritage of the South African Reserve Bank, also providing us with a platform for more interactive learning and continued engagement with the rest of the public in terms of the work that we do as the South African Reserve Bank. So, Chair, I will pause at this point and check if there are questions for us.
Thank you very much, Ms. Gaza. Are you done with the presentation?
Not
All of
yet,
it?
not yet. Not done with the
Okay,
presentation. I just wanted to check.
just finish the presentation. Then our members they are noting and they will ask questions after you do all the presentation.
All right. Thank you very much,
you.
Chair. I do see a hand on the screen. Chair?
Honorable Bress, can we please allow them to finish all the presentation? Then the questions will come.
Will do so, Madam Chair.
Thank you.
Thank you very much.
Honorable Bress. Thank you.
Thank you. So, Chair, if I can at this point hand over to Dr. Witness Simbanegavi. He is going to be taking us through the economic overview and the outlook parts of the presentation.
Thank you very much, DG Fundi. Good morning, members of Parliament and the Chair. I just want to sort of run through the few slides that we have on the economic overview. So if we can go to the next slide, please. So I think the starting point for us is to just make the point that when we look at the global economy for this year, we see that it has been rather resilient compared to what we expected earlier in the year, given what happened with the tariffs that we saw being imposed by the United States. So in this case, I think if you look at the chart that we have, most of the countries are expected to grow slightly better than they did last year. And I would like to draw your attention to the right-hand side chart where we have mostly the BRICS economies and South Africa. And you will see from that chart that South Africa's performance really compares poorly compared to the rest of the BRICS economies. And it's a point that I will touch on again as we proceed. Next, please. These tariffs that were imposed by the United States on most of its trading partners are seen as a significant risk to global growth going forward. And of course, if you look at the left-hand side chart, we see here South Africa is one of the countries facing significantly high tariffs on its exports to the United States. But we are not alone. There are other countries as well. We have China, we have Canada, Switzerland, and Brazil facing slightly higher tariffs than us. And if you look on the right-hand side, you see that most of the global economies will experience lower growth because of the tariffs. But there will be a few countries that will benefit from the tariffs simply because they are going to face lower tariffs. And as a result, there will be some trade diversion where trade that was supposed to come from a country like South Africa might actually now be coming from a country like Chile because they face a lower tariff. So South Africa will be losing, and then these countries will be benefiting in that case. So that is what you see on the right-hand side chart, where some countries are likely to benefit, but the majority of countries, including South Africa, are likely to face some loss to their output. In the case of South Africa, we expect GDP to decline by 0.4 percentage points compared to what it would have been if there were no tariffs. Next, please. So here we just want to make the point that yes, we have seen the tariffs being imposed, and if you recall, in the last few years we saw global inflation rising sharply, which is what we are showing on the left-hand side. But what we are seeing now is that inflation is coming down globally. But also, what is important to note is that inflation actually is coming down much faster in the emerging economies compared to the advanced economies. And we think this reflects in part the fact that emerging economies actually have handled their policies better in this inflation cycle when compared with the advanced economies. For example, early in 2021, 2022, while most of the advanced economies thought inflation was going to be transitory or temporary, a lot of emerging economies actually responded in the right way by sort of raising interest rates to curb inflationary pressures. And that is also what we are seeing on the right-hand side, where we see inflation coming down much stronger in the emerging markets compared to advanced economies. So I think the idea of good policy making, I think, is clearly visible from these charts. And also in the way that they are moving in terms of easing policy, I think most emerging economies have done pretty well. And here what we are trying to show is that the domestic economy did fairly well in the second quarter of this year. And in fact, it performed better than what was expected because before the data came out, we as the SAB expected the economy to expand by 0.4% in the second quarter compared to the first quarter. But actually, what we saw was a doubling of that. So the economy expanded by 0.8% in the second quarter, which is very much something that we are happy with. But one of the points that we just want to make is that we don't see this as a lift-off in the sense that we are going to all of a sudden see South Africa catching up to the other emerging economies in terms of growth. And the reason why we say that is, of course, if you look at the chart, you can see that there's been a lot of volatility in quarterly growth rates. And we think that part of the reason why we see this volatility is because of the structural constraints that limit the pace at which the economy can expand. And also, if we look at our potential, what we call potential growth or the capacity of the economy to grow, it's very much constrained at the moment. It's below 1% on average over the last 10 years. So that is capping the pace at which the economy can expand. And some of the reasons for this low potential is because of the energy supply constraints that we have experienced over the last decade, and also the cost of energy, I think, and other administered prices, a point that I will again come to later on, and the logistical challenges that we are facing at the moment. There are efforts to improve this, but these constraints remain binding, and as a result, they're putting a cap on how fast the economy can expand. Let's go to the next one. So what we see here is that when we look at what's driving domestic economic activity, mostly it has been household spending. So consumers are really driving the growth of this economy. And what we have seen is that investment has been rather low. In fact, investment hasn't recovered the way it was in 2019. So 6 years later, we are still below where we were in 2019. I think that is very concerning. If we think about how do we beef up or strengthen the capacity of our economy to grow, we need investment. And if I can just make a point, I think in the business day today, one of the points that the article actually speaks to the fact that private companies are sitting on nearly 2 trillion rands in savings. And one of the reasons, or the main reason why they are sitting on this money and not investing is because of confidence. They don't have confidence that the economy can absorb this amount of money in a productive sense. So as a result, they rather save and earn interest or returns on those savings rather than invest, which is a travesty given that we face such high unemployment. And to give perspective in terms of how our investment is performing compared to our BRICS compatriots. So, for example, in India, in 2020, at the moment, or 2024 data, investment as a ratio of gross domestic product, or the ratio of the size of the economy, was sitting around 34%. In China, over 40%. Russia, 24% of investment as a share of GDP. And of course, Brazil, 17%, and South Africa is sitting at 14%. So clearly we have an investment challenge, and that investment challenge is actually reflecting in our slow growth rate as an economy. Next, please. So, as I said just in the previous slide, that households are driving growth in the economy. And also what we are seeing is that credit extension is accelerating, mainly coming from the corporate side. And this investment from the corporate, the credit extension from corporates is largely on general loans, which is more like working capital. And I think this is consistent with the recent sort of pickup in growth that we have seen. So obviously companies will be borrowing to finance working activities, and which again is something that, if it is sustained, is very much something that we would like and appreciate. Part of the challenge, of course, is that well, we know that companies are sitting on a lot of cash, but they are still borrowing. So to try to reconcile that, I think the point here is that when the companies invest in their sort of short-term assets rather than in fixed brick and mortar, they tend to be getting higher returns at the moment because our economy is growing much slower. So the returns from fixed investments are much lower. So they would rather investments in sort of other assets that yield better returns. So that is what we are seeing here. One of the challenges that we perceive in terms of the sustainability of our growth at the moment, or the growth path that we are on, is that because our growth is driven mostly by household spending, here we are seeing that actually the challenge is that employment hasn't been doing well. So we still have first a weak employment environment. And of course, if people are not getting jobs, then I think the challenge is that it limits how much they can be able to spend to boost our growth. Just to give you a sense of some of the data that we've seen, for example, if we were to look at, so the left-hand side chart that you're looking at, this is data that comes from Statistics South Africa, what is called the Quarterly Labor Force Survey. They also have another publication, which is called the Quarterly Employment Statistics or Survey. And the difference between the two is that the Quarterly Labor Force Survey, this includes agriculture, includes informal activities, whereas the Quarterly Employment Survey actually just focuses on businesses. And what that survey shows is that actually the economy has been shedding jobs since the second half of formal employment, since the second half of 2023. So clearly we have a challenge in terms of strengthening the household's balance sheet to allow for greater spending and therefore greater growth. So that's a challenge that the economy is facing. Next. Here we see that the sub-focus looking at what we expect in the next few years in terms of economic growth. For this year, we see that we expect a growth of 1.2%, and most of the growth over the next few years will be driven again by household spending. And here you see that also investment for this year, investment is expected to drag or to detract from growth. The same thing that happened last year, which are the green blocks. So investment is not contributing to growth, rather it is taking away from growth. But we expect that in 2026 and 2027, we will see some contribution by investment, but again, it's very little. Next, please. So for us to be able to generate or sustain higher growth, I think we require significant growth in investment or investment recovery. And if you look at this chart, you can see for yourselves that over the different periods since 2000, investment has performed very differently. And you can also see that the growth of the economy has also performed very differently and weakened as investment weakened. So we do need to boost our investment to be able to generate more growth. And one of the reasons why investment is not performing as expected or as required has to do with red tape It's making it difficult for businesses to start activities. We have issues around corruption, we have issues around skills, and we have issues around admin services and goods, which are one difficult, sort of the supply is not intermittent at times, and also the costs are rising much faster than the rest of than the costs in the rest of the economy, which reduces competitiveness and profitability of enterprises. So these are areas where, if efforts are directed at these bottlenecks and they are relaxed, we would expect to see investment picking up, especially given that we know that our corporates are sitting with significant amounts of cash that they are willing to deploy if the environment is permissive. Next, please. So turning to inflation, this is one area I think we can be proud of as a country, where we have done very well in terms of containing inflation. And so over the past year, we see that inflation has been around the lower limit of the target band, which is 3%. And of course, there's been a recent uptick, but it's modest in the last few months. And the importance of keeping inflation low, it's multiple reasons why low inflation is desirable. Of course, one is that it protects the real incomes, especially of the people, the poor people, or those living on fixed incomes. This is, as DG Fund was mentioning earlier, this is pretty much the mandate of the SAP to protect the value of the currency or the purchasing power of the currency. So keeping inflation low helps us to achieve that objective. But also, I think what is important is that when you look at low inflation, it does allow for long-term planning and investment, because then companies are more clear as to they have confidence that the future will be looking pretty much as it is today, and therefore they can plan better. Now, just looking at what we have here in terms of what is driving the recent uptick in inflation is what we call non-core components of the inflation basket, or the consumer price inflation basket. And what we mean by non-core inflation is just three components mainly. So it's fuel inflation, it's food inflation, and also electricity price inflation. So those three components are what we call non-core inflation components, and this is what has been driving the recent uptick in inflation. Next, please. In terms of core inflation, it remains well contained for now, and largely benefiting from a stronger currency. And it's a point that I think I will also touch on again later, that the keeping inflation low does help to also strengthen the currency, and then of course that feeds again back to better inflation trajectory from the currency. And next, please. So inflation expectations are an important feature or aspect of our inflation, understanding the evolution of inflation in the economy. So when inflation expectations are well anchored, closer to the preferred objective or the target of the central bank, then economic agents, when making their own decisions, will think about things like, for example, if you are entering into a contract, you then escalation clauses that you have to work on in the contract will be determined by what you think inflation will be going forward. So if you believe that inflation will drift towards the central bank's objective, then of course that helps in terms of anchoring your agreements, whether it be wage agreements or any other kind of contracting. And so that's something that we desire, and we would like to see more agents or economic agents in making their business contracting to actually base their decisions closer to the 3% objective of the central bank. So expectations coming down towards the 3%, I think it helps us to get that confidence that inflation can be kept sustainably around 3%. Next, please. So on this slide, we're just showing that even as we have managed to keep inflation low over the past year, around 3%, this is not true of administered price inflation. In fact, as you would see from this chart, aside from the benefits of lower global oil prices and also a stronger rand, we see that if you look at the red line, which is administered prices, excluding the basic fuel price, they remain well above the 3% objective of the central bank. So admin prices have not been helping in terms of keeping inflation low. In fact, would say inflation has been low despite admin prices remaining exceedingly high. And of course, as we'll see just below, some of the key culprits in terms of what's driving admin prices. If you can go to the next slide, please. So what we see in this slide is that electricity price inflation, as well as water tariff inflation, have been rising at a much faster rate than inflation in the overall inflation in the economy. And the challenge of this is that it is hitting the rest of the economy because, again, these components, so water, electricity, these are inputs into production. So having them rise at much higher rates than the overall inflation means they reduce competitiveness of domestic producers. So initially, obviously, the idea is not to say all price increases are not desirable. So sometimes you do want price increases that are somewhat higher. For example, we know that over the past decade or decade and a half, around 2009, we had a short supply of electricity and we needed more investment in the sector. So I think some of the higher price increases were justifiable under those conditions. But I think the challenge is that with inflation remaining so low and now expected around 3% for this year, having significantly high electricity price increases or water price increases, I think it's becoming increasingly harder to justify. And I think it does indicate dysfunction in the price setting for administered prices and services. So an area that I think requires a lot of attention. Next, please. So given that inflation has been kept under control for the past year and the outlook of inflation also very stable and modest, we saw that the Monetary Policy Committee managed to reduce borrowing costs in the economy by 125 basis points since September 2024, which again sort of supports household spending, supports business credit extension because now the cost of accessing credit is much lower. And of course, the good thing is that with inflation low and expected to remain modest, our model suggests that there is some room for further rate reductions, provided the expectations continue to evolve as expected in the model. Next, please. So here we see that just going back a couple of decades, just to see what was happening with inflation before and then after inflation targeting. So inflation was very volatile and high before the inflation targeting of 2000, which was one of the motivations for wanting to try to stabilize inflation through inflation targeting framework. So between 2000 and 2017, yes, initially inflation was also volatile, partly because of major shocks that hit the economy rather than the framework itself. So we know that in the 2001, 2002, we had a sharp depreciation in the rand in 2001, which had, of course, inflationary implications. And then, of course, in 2008, we had the global financial crisis, which again came around together with energy and then food shocks, where we see inflation spiking. But one of the things that we have seen since then is that inflation has somewhat stabilized, initially around the upper limit of the target. But from 2017, when the SARB announced that it will target inflation around 4.5%, which is the middle of the target range, we saw inflation drifting lower to the midpoint, only to be dislodged by the post-pandemic inflation surge. But I think an important point to take home here is that what we see as the peak, so the peaks of these inflation surges have gradually declined. So which means with credible monetary policy, you can actually reduce the impact of shocks on the economy in terms of inflation. So we see that actually in South Africa, our peak for inflation was 7.8% in 2022, whereas the other countries actually experienced inflation closer to 20%. So I think this is a testimony to the credibility of the inflation framework that we operate. Next. So here what we are also showing is that the fact that inflation was well contained over the past year, closer to 3%, and of course the recent sort of decision by the Monetary Policy Committee to anchor inflation closer to 3%. Has delivered some benefits for the economy, significant benefits, in fact, because as we can see on the left-hand side, the borrowing costs for the public sector have significantly come down over this period. And what is important to also note here is that it's not shown in the picture, but if you were to compare with other major economies, actually South Africa has moved in a much more positive direction because actually borrowing costs have been rising in most other advanced economies, partly because of increased borrowing. But in South Africa, we have seen actually borrowing costs for government coming down significantly. And also one of the benefits we have received is that the rand is significantly strengthened. And we know that we are an economy where imports are very important. A strong rand is very helpful in terms of reducing the inflationary impacts of what we call imported inflation. So the rand has helped. If you think about fuel prices, we have been having fuel deflation over the past year, largely because the rand has been performing well. So these are some of the benefits that one derives from keeping your inflation low and stable. So I think with that, Chair, I would like to submit. Thank you.
Yeah, that brings to the conclusion the presentation of the South African Reserve Bank. Thank you.
Thank you very much. That was so informative presentation. And most importantly, when we are told that the rand is strengthening, it's really, it's indeed, it's a positive. It's moving to a positive direction. The presentation that we just received now, yeah, it shows that at least the South Africa is now moving to the right direction. But through your assistance, it will make sure that we are going somewhere. And I already see the hand of Honorable Hwase. I've just received the message on the group of Honorable Suisa, who is in KZN. We'll just look at the WhatsApp if there's any question from her side. I've noted all honorable members in that order. That is Honorable Hwase, Honorable Majola, Honorable Brett, then the Honorable Ryder, the last one, Honorable Swart.
Chair, I'm struggling.
Oh,
I'm
okay,
struggling with raising.
Okay, the committee whip. Okay, I'll note you, Honorable Whip. Okay, the last person is Honorable Whip, Honorable Mumalo. Thanks very much in that order. Honorable Hwase.
Thank you very much, Chairperson. Chairperson, I request not to switch my video on. I'm in a very bad space. May I just continue with my video off, Chair?
Yes, Honorable Hwase.
Thank you very much. Good morning to all the colleagues from the South African Reserve Bank and honorable members and the support staff on the platform. Chairperson, I have a few clarity-seeking questions. First of all, I want to know, it was not clear, I want to know the key drivers of the South Africa's GDP growth and how can policymakers boost the economic expansion. Few of my other questions, Chair. I need an explanation on the recent trends in global growth and inflation and how they impacted our economy as the country. My other question is that I want to know the key drivers of administrated price inflation in our country and how does the Reserve Bank plan to address these pressures? And how does the Reserve Bank inflation targeting framework impact countries' bond yield and exchange rates? My last question, Chair. I need South African Reserve Bank to provide more information on the impact of tariffs on the global growth and trade, and how this affects South Africa as our country and the economy of South Africa. Thank you very much, Chair.
Thank you, Honorable Majola.
Thank you very much, Honorable Chair. Greetings to the members of the committee and also to the members of the South African Reserve Bank. I would like firstly to share the same sentiment. The information is very informative. Madam Chair, without going into details in terms of slides, but the content of the report indicates that the investment is in the center of the South African economic growth. Contained on the presentation, Madam Chair, it's been indicated that compared to our BRICS partners, we are investing 14% compared to the average of 40 compared to our BRICS partners being China and India. There are some factors contributing to that, Madam Chair indicated. Amongst others, it's skills, it's red tape, it's corruption. I want to check with the South African Reserve Bank because there are good lessons that can be learned from the BRICS brothers who are successful in terms of investment, which is key in terms of economic growth, as to whether was there any benchmarking exercise conducted, was there any lesson learned from that exercise to change the picture of our investment in particular. The second question, Madam Chair, is with regards to the funding of South African Reserve Bank. It's been highlighted on the report that they don't get any fiscal from the government in the form of budget to conduct their business. Understanding the struggling situation we are in, I want to check the financial position with regards to their own generation of the revenue. How is the status of the finances at this South African Reserve Bank? Is it sustainable? Is it the picture similar to the country's economic outlook? The last one, Madam Chair, is just a general question, looking at the economic outlooks and the mandate of the South African Reserve Bank. Are they in a position to comfortably assured us that are they succeeding into their mandate? Thank you very much, Madam Chair.
Thanks, Honorable Majola. Honorable Brett.
Thank you, Honorable Chair. Just want to try to, for some reason, I'm not visible on the screen, so, but I've quite a few.
Yes.
No, I don't know what happened there, but anyway, thank you very much for the presentation, especially the presentation that was circulated to the committee, the 73-page presentation. I found that extremely interesting and informative. I have a very, I have a big interest in the workings of reserve banks since I've been a child in primary school. I have a few questions, and as well as a few remarks. First of all, regarding the Reserve Bank Museum, I'm looking forward to receive an invitation to the opening of that museum. I would very much like to visit the museum. But coming to financial stability and exchange controls, I have a few questions. What assessments have the Reserve Bank conducted to determine the potential risks posed by especially stable coins in respect of unregulated capital outflows, financial stability, and monetary policy effectiveness in South Africa? Stable coins are linked to foreign currencies, and one stable coin, for example, will carry the same value as $1 American. My second question in that regard: what specific regulatory measures have been introduced or are under development to ensure that the trade and circulation of stable coins within South Africa fall under the ambit of the Financial Sector Regulation Act and other relevant laws? And how will compliance be monitored by the Reserve Bank? My third question is, how is the South African Reserve Bank working with other institutions within the financial sector to develop an integrated regulatory response to mitigate the medium and long-term risks posed by stablecoins to domestic economy and currency stability? And lastly, on the issue of stablecoins, what safeguards are in place or are being considered by the Reserve Bank to prevent virtual currencies from being used as a vehicle for illicit financial flows, tax evasion, or large-scale currency flight that could undermine the value of the rand and the stability of the South African financial system? On the GDP, household spending is the main driver of the GDP growth at the moment, while unemployment places a drag on household spending. Now, the two are actually working against one another and is counterproductive. I would love to hear the Reserve Bank's recommendations in this regard or ideas in this regard. Coming to investment in the economy, now it appears that the capital is available for investment, but market confidence is a barrier. What is the Reserve Bank's proposal for investment growth? And then lastly, Madam Chair, let's look at the inflation basket. Food inflation as a driver of inflation is one of the factors that's being taken into consideration. Now, questions regarding the items determining the current basket. How is the basket determined, and how does it influence the consumer price index? For now, that is my few questions. Thank you, Madam Chair.
Thank Mr. Brez and Loretta.
Thank you very much, Chairperson. Yes, much appreciation to the Reserve Bank for the presentation this morning, but for the work that went into putting it together for us. It's a complex space and one which we welcome any education or information that will help us get our heads around it better. I echo the Honourable Britz's welcoming of the establishment of the museum, and I too will keep a close eye on my inbox in that regard. Chair, yeah, I'm going to keep it fairly simple. I think Honourable Brits has covered some of the questions that I wanted to talk about, especially when it came to the basket, which I think is probably one of the controversial issues at the moment. The other controversial issue obviously goes to inflation targeting and the setting of inflation targets, and of course the balancing of managing inflation against the need for growth. Now, it's quite interesting that I read in the newspaper last week that South African businesses are sitting on a massive stockpile of cash, indicating that high interest rates are not an impediment. They're not holding back investments. You know, it's people are not looking to borrow more. They're actually using their money to get the small returns on interest at the moment, possibly cautious to invest at this stage. So So perhaps we can just get a bit of a headline around the thinking about inflation targeting, where we're going at the moment. I know that there has been some discussion and speculation in the media. Perhaps we can get something a little bit more firm from the Reserve Bank itself, from the commissioners, deputy commissioners, and perhaps talk about the impacts. Now, I mean, it's often said that inflation is the only instrument that reserve banks have, and I think I disagree a little bit with that. Perhaps you can talk to me a little bit about how much influence SARB has over, for example, M3 money supply, when we see quite a strong correlation between M3 and inflation trajectories. Supply and demand seems to impact money as well. So yeah, maybe you can just give us a little bit of a crash course in terms of that, and we can take it from there. And my only other comment or question is, I hope that Dr. Mampo is not giving you too many headaches. She gave us enough in this committee. I hope she's behaving herself now. Thank you very much.
I will. Honorable Sart, our chair. Honorable Sart.
Thank you, Honourable Chair, and thank you very much for the presentation that we received this morning. Very informative. Just a couple of questions from my side, Honourable Chair, is given SARB's mandate in price stability in the interest of sustainable growth, what tools beyond the repo rate are available to better support inclusive economic development in our country? And I think it was on slide 17, in Strategy 2030, how will SARB actively address persistent inequality and youth unemployment where monetary tools are limited? I want to acknowledge the importance of SARB's independence and transparency, but also want to challenge the bank to do more to communicate the social impact of any decisions taken, especially to the poor of our society. And then one or two other questions, and just for clarity, with systemic risk increasing from state-owned entities and grey listing, what additional resilience buffers is the SARB encouraging banks to hold? The other one is, what has been the public response to Cody's laws, and has it enhanced confidence in the banking sector, especially amongst the unbanked? And my other one is, how is SARB ensuring that the dominance of 5 banks does not undermine competition or lead to a higher cost for especially the poor consumers? And given, sorry, am I time out?
No, sir. I thought that there is a network problem on your side. You can continue.
Sorry. I think let me just put up my thingy. Can you hear me, Chairperson?
Yes, you can continue.
Okay. Given the serious implications of remaining on the grey list, what can Parliament do to support SARB's remediation efforts with other institutions? And the second and the last two, how will SARB ensure that digital payment modernization reaches rural areas especially, and does not deepen the divide between urban and poor communities? The last one, has SARB assessed the readiness of township businesses in our country to adopt the fast payment system, and what targeted support is planned? Thank you, Chairperson. I hope that you've received all my questions.
Yes, no, we do. Before I give Honorable Suisa, I want to check with Honorable Brev if this is a legacy hand.
Yes, Madam Chair, it's actually new, and there were two aspects that I wanted to raise a question or questions, which I did not cover in my initial opportunity.
Okay, let me allow Honorable Suisa and Honorable Numara, then we'll have Honorable Brev.
Thank you, Madam Chair.
Okay, Honorable Suisa. Honorable Suisa, I think we'll understand. Okay.
Hello.
Yes, we can hear you, Honorable Suisa.
Okay. We were given a global overlook or a framework of what the work of the South African Reserve Bank is. I was hoping that we would have gotten a more detailed presentation, Chairperson, because we did not even receive any notes from the content advisor of the Finance Select Committee. So it becomes a bit difficult for someone to ask questions, but let me try to put some questions. I'm not even sure if they are relevant for the Reserve Bank or not. But Chair, I need to highlight something that we've got a serious problem when it comes to, because I'm speaking about this because they've highlighted about the digital of people making payments using their apps or through the bank, whether it's domestic or international. But the problem that we are sitting with, taking into consideration the unemployment rate that South Africans are facing, you find that the charges that are being made by banks, it's too much. Every transaction that you make, you have to pay. It doesn't matter if you are sending to the same person. And this thing is affecting everybody across South Africa. So I want to check with the Reserve Bank. What role do they play? Is there any role that they play towards ensuring that actually banks are charging accordingly, and they do not allow South Africans to find themselves having to pay more bank charges? Because some of us at the end of the month, we actually pull out statements and find that the amount of money they pay towards banks, it's a bit steep. You put more money into transactions and you don't get any benefits out of that. Number two, they spoke about bursaries that they are giving to students who want to actually go into I'm not sure which field it is. Has there been any programs being done by the Reserve Bank to actually go to schools and make learners aware that there are certain programs or there are certain bursaries that they are availing to them to venture into whatever field that is in line with banking? That's another thing. I thought the Chair, they would also highlight us on the issue of tariffs, because it's a big problem in South Africa. We want to know what system is being used to determine which tariffs are applying, how much are the tariffs to the different countries. Because as we are standing now, as they've also presented that the GDP of the country is not looking good. So how do the tariffs fit in this whole global economy? Also taking into consideration that our domestic economy, even in our rural areas, as I think Honorable Majola has highlighted, that in the rural areas we don't have a lot of economy. The government speaks about rural economy, but it does not happen. So what role can they play to ensure that actually we as the committee can assist those that are supposed to make sure that rural economy does happen in rural areas? How can we assist them? How can we advise them? How can they advise the government to say that this is what needs to be done to ensure that rural and township economy actually goes up in the country. I'll stop there, Chair, before my network goes out. Thank you very much.
Thank you, Honorable Sibisa. Are you still in KZN?
Yes, I'm still here.
Okay. This network has assisted you this time. Honorable Numalo? Honorable Whip?
Thank you very much, Chair, and my greetings to a good self for all the members, honorable members, and my greetings to the South African Revenue Bank. Chair, let me acknowledge their presentations. It assists us much to understand what's happening there, and looking at the issue of the tariffs, the issue of investment, and also the stable economy on our end, which is something that is a bit positive when you look at the issues that have been raised by the Reserve Bank and also the deputy commissioners, as to say. Chairperson, one thing which I want to raise with the high unemployment in our country, I hear one commissioner, deputy commissioner, saying there's massive cash in businesses for investment. Chair, it just strike my mind to say, with those massive cash to assist the economy and looking at the issue of the red tapes that they've set, it's something that is also making a slow growth in our country. I think let's, as a committee or being assisted by the minister, to make sure that they release or they relax some of the red tape so that our people can be able to get employment. One member was talking about the rural economy. Most of us, myself, I'm from a rural province where things does not come at all to some of the areas just because of the ruralness. Looking at what our deputy commissioners were saying, they're having 2 outreach per annually. So I don't think that it's enough to reach, even if you can't reach the whole masses, but I was of the view that they can be able to extend the 2 to 4 so that our kids can be able to reach them and be able to be assisted. They were talking about the issue of bursaries. Some of the kids are so intelligent, but just because they are staying in rural areas, those things cannot reach them. It's something that they have to look at so that they expand themselves to other areas, like there's those school symposium where they can be able to make sure that they give information to those kids. The other matter is the issue of BRICS. They've said it that as a country, we are in 14% instead of 40%, as BRICS are our partners. Whenever your partner is struggling on whatever, what are issues that you can be able to assist your partner so that he can be able to be lifted up like you, even if it can't be like you, but at least 40%, pass mark of 40% is 20, so that he can be able to pick up as a country. You can't have someone who is your partner every day. You know that this partner is failing, this partner is lacking somewhere, somehow, and you are not assisting. I think BRICS must do something to assist us, give us information, give us advices, boost our capacities so that we can be able to be at least half their standard. Not now we are a bit below. 10%, I'm happy on the issue of inflation to say that we are picking up, and also the issue of what is the problem is the tariff that has been imposed by the USA to us. It shows that USA is not on our side, so we have to make sure that we come up with a way to deal with the issue of tariffs, because really it's on us. There's nothing that we can do. And in terms of our economic overview outlook, we must make sure that we come up with a way that will assist our businesses, our farmers who are exporting to the USA. It's a matter of concern. It's our number one problem as we speak. The last one, Chairperson, is the issue you mentioned, Deputy Commissioner, that by 2026, contribution by investment will be a bit up. I want to know from my side what inform you, because really as now we are struggling in terms of the investment. So if ever there are other information that you need to highlight to us to understand as to what will pick that contribution by investment in our country, so that we can be in a better position to be with the BRICS, we can be in a better position to make sure that we are we are creating jobs, because our main issue now is we must have that investment that will assist those investment that will assist us to make sure that we create more jobs for our people, and that's where we will see the economy picking up. So, Chairperson, I think I have been covered by some of my colleagues on a lot of balancing of inflation. They've covered me in those things that I wanted to ask for now. Thank you very much. The presentation was very informative. I think it needs more time, Chairperson, if it allows, so that we can get more information on the issue of the South African Reserve Bank, understand it more, and also our community benefit from it. Thank you very much.
Thanks very much, VP. I hope that we'll also look at another time to invite them for another briefing session. I can hear that honorable members, they have also the interest. Brett, I think that is your last opportunity.
Thank you very much,
Before
Madam
I
Chair.
hand over. Thank you.
Yes, Madam Chair, the two outstanding issues that I wanted to touch and raise. The first is the municipalities' contribution to high inflation. And I think I want to highlight the unintended consequence that is directly relevant to this committee and the NCOP, and that is higher than affordable electricity and water tariffs imposed by municipalities are actually driving inflation, and that is an area of concern. What measures, according to the Reserve Bank, can this committee take to minimize or eradicate this unnecessary inflation driver? And then lastly, on bonds, I want to ask a question: how competitive is SA bonds with international competitors? And what does the Reserve Bank do to explore SA bonds to be more competitive and more attractive to international investors? And lastly, on the issue of bonds, does a weaker rand and high interest rate support bond attractiveness to foreign investment in South African bonds? Thank you, Madam Chair.
Thank you, Honorable Brett. Ms. Gaza, I think I have some questions also from my side. The one question, what can the government do to mitigate the risk of this tariff increase? We can also, the other one is, can South African Reserve Bank elaborate on the impact or benefit of the 3% inflation targets rate compared to the 3 to 6% target range? The other part is how will the new 3% inflation target how, Honorable Sartre, disturbing me, you have asked your questions. What must policy, how will the new 3% inflation target impact fiscal policy, particularly on the side of revenue? What must policymakers do to encourage the private sector to invest 1.3 trillion or to improve business confidence? Thank you very much. Will you be able to try to respond to all questions, Ms. Gaga?
Thank you very much.
I see you have changed the gadget now. You are now Fundi Tasibana.
Yes, so thank you very much, Chair. We are all in the same room, so
All
we
right.
move from one link to the next. So you'll just have to bear with us. The questions are many, and thank you very much. It is showing to us that members are very engaged with the work that we do as a South African Reserve Bank. I will first start by asking Deputy Governor Mampho Modise to come in on a list of questions, and then we will introduce new colleagues as we are answering some of the questions as well. So DG Modise, over to you.
Thank you, DG Fundi. Thank you, Honorable Ryder. It's always such a pleasure to engage with you in Parliament. I have missed you dearly. Chairperson, thank you so much for taking the time as the committee to engage in what we do. I think as a first step, one must just appreciate how Parliament is engaging with the SAB, and I think what is critical for us is for the SAB to be known, for the public to know what the SAB does. And I think these engagements, if the committee can and if time allows, it would be good to have them more regularly than once a year. Just coming back to the different questions. The first questions that you have asked relate to the funding of the SAB. We have finalized our annual report, and I think, Chair, I will ask the team to send to the Secretariat the link of all our reports for the SAB and for the subsidiaries so that you can have the detailed information. But in short, Chairperson, the SAB is profitable. So for the financial year of 2025, the profits that were registered by the SAB is an increase of 806%, and this is mainly because of the transaction and the allocations that we did for the Treasury and the allocations that the Treasury had to bring back to the Reserve Bank. This is the transaction of the GFECRA, where is the gold, foreign and contingency reserve. So all in all, the SAB made a profit of 118 billion. So we are profitable, and this is compared to the 13 billion of the previous year. And when we look at the subsidiaries, Chairperson and honorable members, the ones where the profits were recorded would be the South African Banknote Company, where the profits increased by 146%, but this is about 40 million. And this was from a loss of 87 million in the previous year. But this is because the banknote has increased the sale volumes, and they've also managed their expenditure. And then, of course, with the new baby, Cody, they recorded profits of 1 billion. And these are classified as profits, Chairperson, only because of the accounting treatment of this. But basically, these are the premiums that the banks have been paying to Cody for this financial year, and we're looking at 1 billion. So if you ask me whether I'm worried about the SAB's profitability or the SAB's balance sheet, the response would be no, because of the profits that we have registered and how we're managing the balance sheet. But I think it would be best for the honorable members to just have a look at the financial statements so that you can get more information. And then just moving quickly to the questions relating to stable coins, cryptocurrency, and what we have been doing as the SAB to deal with the regulations. Firstly, what we did was we established a working group, and this working group, Chairperson and honorable members, includes the South African Reserve Bank, It includes the Financial Intelligence Center. It includes the Financial Sector Conduct Authority. National Treasury is also part of the working group, the National Credit Regulator, the Competition Commission, as well as the South African Revenue Services form part of this group. What we have realized is that cryptocurrencies, including stable coins, are not something that the SARB can regulate on its own. It requires an effort from all the regulators, and we have been working with these regulators to look at what is it that we need to do and where we need to move in terms of these stable coins. So far, what we have done, we've broken down the work that needs to be done in few phases. And the first one, honorable members, was that we had to look at whether these cryptocurrencies, how are they defined? How our regulatory framework taking into consideration these crypto currencies, and how do different people or different regulators regulate these cryptocurrencies? So the first thing was the financial the FICA had to amend its definitions, and we did this in 2023 to include crypto assets, service providers as accountable institutions. And we did that just to make sure that all institutions are accountable and they fall within the regulations. And then the Financial Sector Conduct Authority in 2003 then declared that crypto assets are now financial products. And what this means is that we can now look at the regulation of the crypto assets, and we have submitted some of the changes in regulations in the COFI framework that would be run by the National Treasury. And this, of course, is pending proper legislatory processes, but we've already started with amending the regulations. And then thirdly, we have work in progress where the Financial Surveillance Department is looking at amending some of the exchange control regulations and manuals to develop the frameworks that will deal with the licensing and the reporting of these crypto assets. And then in phase two, where we're moving towards, and we need to fast track this because unfortunately, technology moves faster. The first step of this is that the Prudential Authority, which is within the South African Reserve Bank, will be implementing the Basel Committee on Banking Supervision Standards, and this will basically be looking at how the banks treat the exposure to crypto assets. And also what we are doing now, and we have worked with the CSIR, is to look at how can we collect the data, because you need to regulate something that you understand how big it is. And we are working with CSIR to get that data and make sure that we use the data to see if there are potential financial stability implications from these crypto assets, and how big are they, and how are they revolving. And then lastly, we are finalizing now a position paper, Chairperson and honorable members, on the regulations, the supervisions, as well as the oversight of the stablecoin arrangements in South Africa. We will finalize that paper and issue it for public comment. So the work, it is still in progress, but I think we are moving towards a point where we can have a position as the Reserve Bank and as the other regulators, just to ensure that while we note the risk of these crypto assets or stable coins, we don't choke and choke innovation with regulation. So I think we're trying to balance what is proper regulation given the risk of the stable coins, but also taking into consideration the evolving technology that is coming through. The other question that I'm going to respond to, Chairperson and honorable members, this is the question on the Statistics SA and the revisions to the CPI basket. So in January, Statistics SA issued the new weight for inflation. So what they do is over time, I think it's about 5 years, they have to revise the weight so that at least we measure the economy as it changes. So they have revised the weights. These are the new weights, and they usually add other components that are beginning to be more frequent in a customer's basket, and they take out the ones that they think are no longer that relevant. They also do a revision on the inflation for the poor, or they classify it according to different income groups. And Chairperson and honorable members, when we did the comparison between the two series, the old basket and the new basket, the changes were not significant, and it means the impact or the weight haven't changed that significantly. So this was done in January, and I think they will do another rebasing 5 years from now. Then the question on the CODI launch, Chairperson, I think I, for one, got very excited when CODI was launched last year, because what this means was that at least the depositors are no longer, or they should no longer be worried when there is a run in the bank, because they know that their deposits are protected. So we launched CODI last year, and this year we had to deal with the Tsobotla Cooperative Bank. It was placed under liquidation recently, and what we did was, as the sub, we went to Ditsobotla. We went there to look at the bank. We checked the depositors. We assessed how much the bank, or how much the depositors had in the bank, and we did the payments accordingly. I think what has been key for us as the sub was that, if depositors know that their money is safe, it allows for the bank to then manage the transition of a bank in a manner that is stable and doesn't impact the financial stability. So I think CODI is one of the success stories, and we continue to make sure that we work with the banks and for the depositors to know and check if their bank are covered by CODI. So all the registered banks have to be members of CODI, and they are, by law, they can't register or they can't become banks if they're not members of CODI. And then secondly, we've realized that the 100,000 limit, it covers over 90% of the depositors. So when we were doing the assessment or the scenarios, we looked at how much beneficiaries have in their accounts, and we looked at a very large sample size, and that 100,000 limit covers over 90% of the depositors. So the depositors in Ditsobotla, most of them got their full amounts that were in their bank account. And what is good about CODI is that even for those depositors that we didn't cover when we went there initially, they have up to 3 years to come back to CODI and apply for their funding. So if they didn't know that CODI was there, or they couldn't come, the space or the opportunity for them to get their funding continues to be there. Chairperson, I'll just take the last question before I then translate to or transfer to my colleagues. It is how the 3% will impact on fiscal policy, and what does this mean? I think, first of all, when fiscal policy does the estimate, they will look at the assessment of what inflation is going to be. And if you look at the budget, they were working on inflation of around 4%, because that's where the inflation rate is now. And when they do, if we move to an inflation target of 3%, I think what we have to look at, one would be over the 3-year horizon. What does this mean for fiscal policy? What are the numbers looking like? Secondly, we have to look at the disaggregated numbers, or what drives the tax policy. You look at personal income tax, you will have to look at corporate income tax, you have to look at VAT. So there's different components within the revenue side that one has to look at when one does the estimate. But I think for us, what is key for Treasury, or the benefit would be how the 3% will impact on their debt servicing cost, how that will be reduced, and how their debt, overall debt, will be contained with low inflation. So it is key for us to look at overall what are the benefits to fiscal policy, rather than just looking at the revenue. And of course, the revenue will be aligned to spending. So if the revenue is growing at 3%, one will also assume that the spending will also grow at a rate that is not far from revenue, so that at least they can manage the fiscal policy position. But I think for us, it is looking at the total impact of this low inflation over time, and what that does for the growth or for the sustainability of the debt or the sustainability of the fiscal position. Thanks, Chairperson. I will hand over to DG Fundi.
Thank you very much. Mute, please. Thank you. Okay, so maybe just one question to add on the back of that last response is just to remind honourable members that the inflation target remains 3 to 6%. There's still work that's underway between ourselves and the National Treasury. We have done all of the academic work. The work is now with the officials. What has happened is the South African Reserve Bank has decided to, in the meantime, be anchoring expectations around 3%. And that's because the band of 3 to 6% still requires us to signal to all of you as consumers, to signal to businesses that because the band is wide, where is our attention focused on? We started off focusing on 4.5. We're now focusing on the lower end. And this is largely because we see this as something that will affect investment over the longer run. This is something that will protect purchasing power on a more sustainable basis. Honourable members were asking about the difference between us and BRICS countries. BRICS countries that have got higher growth numbers, BRICS countries that are able to sell more to the rest of the world. If we take that to the pricing level, on average, the inflation of BRICS countries, their inflation target is between 2 and 3%, most of them. And so our inflation target band, which is 3 to 6, is much higher, which means that when we are competing in the same market, South African prices are a lot higher, and that makes us uncompetitive if our inflation level is higher. So allow me, honourable members, to now hand over to Dr. Witness Simbanagabi to just answer a few questions. We had a question on the drivers of South Africa's GDP growth. We had some questions on what is happening to investment and what the South African Reserve Bank thinks it can be done to improve investment. We had some questions on drivers of administered prices. We had some questions on what is happening to money supply and what the South African Reserve Bank is seeing in the numbers. And we also had some questions on how South Africa is affected by tariffs. So with this, you can start, and then I'll augment where I need to. Thank you.
Thank you very much, DG Fundi, and thank you, Chair. I hope you can hear me. Okay, so I think I will begin. Okay, so I think I will start by looking at the drivers of growth. So the way we think about the economy is that we can think of it as what are the key sectors that drive the economy or economic activity. So essentially, there are 4 components, or if you want, you can call them 5 components that drive economic activity. So there's consumption by households, there's investment, there's government spending or government consumption, there's exports, and then there's imports. So those are the 5 key components that drive economic activity. So as we have discussed, in South Africa, consumption is about 65%, close to 65% of GDP comes from consumption. And the rest is divided between investment, government consumption, and net exports. So the challenge, as we said earlier, is that yes, as much as consumers are spending, there are some challenges in terms of income because they have to have income to spend, and it's something that I will come back to. I think where I want to dwell a bit more is on private investment. So private investment is about 70% of total investment in the economy. So really most of the investment is undertaken by private enterprises. And then the balance is split between government and also the state-owned enterprises. So the challenge that we are seeing in terms of private investment is that, of course, on the one hand, they are sitting with significant buffers of cash, but they are not willing to put that money into long-term investments or fixed investments. So clearly what that tells us is that they are not confident enough that if they put their money into a fixed investment, because remember, when you put your money in a fixed investment, or in terms of brick and mortar, it's not easy to liquidate that money. So you have to have the confidence that if you put your money in there and you cannot liquidate it, you should be able to recover or to get enough returns to justify putting that money in that brick and mortar investment. So I think what we are seeing is that there's that lack of confidence. And then trying to look at some of the reasons why that might be the case is that, of course, we have had challenges with load shedding over the past decade. And what it does is that it creates what is called scarring, where some of the industries have maybe scaled back significantly because they could not produce to the amount of capacity that they had, or some industries might even have closed, and it would take time for them they want to see the environment improve significantly before they come back to start operations. And of course, part of the challenge also is that the core economic sectors or services have not been operating or working as well as they should. Here I'm thinking again of energy. I'm also thinking of water supply. I think your honorable members might be aware, of course, of the challenges, for example, with water in Gauteng. These challenges impact industry performance or operations. And then, of course, the logistics challenges that we are currently experiencing, where a lot of companies that, for example, into mining, they have significant stocks of mined products that they cannot move to the ports because the rail is not functioning as well as it should. So because of those challenges that the firms are looking at, then it becomes difficult for them to put more money into brick and mortar investments. They would rather invest in short-term liquid instruments where they can liquidate as soon as they feel like they want to move out of those activities. And the other challenge that I get would be a reason why investment is not picking up, because for the last 2 years, we have had negative contribution of investment to growth. And in fact, I was looking at the data. So for the last 8 quarters, if you count the last 8 quarters, in 7 of those 8, we have negative investment growth. So that's really not good for long-term growth. So the regulatory burden, I think many studies that have been done have shown that South African economy is one of the significantly regulated economic sort of environments. So that's an area where more work is required at government level to try to reduce the regulatory burden. And of course, we also have these challenges of competitiveness, which again arise from things like significantly high cost of inputs into production, including the regulated services and goods. So those are some of the challenges that we see in terms of private sector investment as a driver of growth. Then I think another driver, as I mentioned, is that government spending. As you members might be aware, in the budget in May, the National Treasury announced about 1 trillion of spending in capital investments over the next 3 years. So if that investment, if those investments come through, we do expect that that will actually provide more confidence to the private sector, what we call crowding in, that would bring in the private sector to either partner with the government or engage in activities that support what government is trying to achieve. And in this regard, we think the Operation Vulindlela reforms are critical. They need to be carried through. And of course, the speed at which those reforms are carried through is also very important, because we do need to be able to unlock these vast amounts of cash that the businesses are sitting with. And the best way to do that is to create an environment that is conducive for them to want to put their money in. And in terms of the last two components, which is imports and exports, I think the challenge there, I think this is an environment that is currently challenged because of the tensions that the DG Fund was speaking to in terms of the trade tensions. So global growth is not doing very well. So I think she will speak to that. So then for me, just to pivot to talk about investment and growth, a bit more sort of trying to focus on investment. So yeah, I was just talking about the 5 components. So investment matters in 2 ways. So one, it directly feeds into growth. So when you spend on investment, that spending is counted as part of economic activity, and therefore it generates growth. And of course, the beauty of that is that you actually also, when you do invest, you begin to employ people, because you want people to operate those factories or equipment that you are investing in. So then you generate more, what you call the multiplier effect of investment. If you invest, you generate more output, because you generate employment, and then the people who are employed, they earn an income, they start spending that income. That supports more demand for goods and services, supporting even a greater investment. So that's one channel of investment in terms of feeding into growth. The second channel for investment is that when you invest, you build the capacity for future growth. So, and also for competitiveness. So if you look at our economy, I think one of the challenges that we have had is that because we have seen capital erosion, or what we call investment erosion, declining capital stock, it means the potential for us to produce going forward is also diminishing by the day. So we are not building the capital stock to allow us to produce more. If anything, we're actually losing the capacity to produce more going forward, which I think is a major concern from the South African Reserve Bank. And just to put an anecdote on the table, honorable members might remember that in the National Development Plan, the goal was to achieve investment of 30% of GDP. And that was starting from about 20% of GDP in 2008. But unfortunately, we have been going in the wrong direction, because now we are sitting at 14% of GDP as investment. So that's sort of the challenge that we have in terms of our investment growth relationship. So we do need to see reforms implemented in a speedier with speed to make sure that we unlock this. And I think we did speak to the issues of why sort of underinvestment. I think there are many constraints, as I alluded to earlier. In terms of the admin prices that DG Fund raised, so I think the concern here is that there is no relationship. In fact, most of the admin prices, they don't bear any relationship to the actual cost in the economy as measured by inflation. So usually the expectation is that prices of goods and services in the economy should escalate in line with inflation. And what we have seen over the last couple of years is that for most administered prices, for example, if I look at electricity, it has risen by 600% since 2009. And if you look at water, it's over 500% since 2009, whereas the actual cost in the economy, they've just about doubled. So I think that gap does affect the competitiveness and the willingness of businesses to invest. So I don't know if DG Fund, if I stop here for now.
Thank you very much, witness. If I can, at this stage, perhaps hand over to Thurea Pandey to just take us through the outreach elements of our work. and also our interactions with students.
Thank you. Unmute yourself.
There we go. Thank you. My apologies for that. So maybe just good morning to all the honourable members. If I can just speak broadly about our outreach program, but I want to start off specifically on our bursary program. It's a very, very extensive program that covers a wide range of subjects. Of course, there is a bias towards finance, economics, and the commerce environment, but we also recently started a bursary program focusing on data science. And we additionally also support students who want to study in just about any of the other fields that they choose. So we do have students in, for example, education, health, engineering, and so on. And at the moment, we have over 100 and just over 100 bursars on the kind of core bursary program. But we also are investing, as I had indicated, in a specific program that focuses just on data science, just given the demand that we are seeing from just a broad kind of economic perspective. And so additionally to that, there are other programs that we run. We partner with universities, and through those universities, we also very specifically target students who want to go beyond just their honors studies and do masters and PhDs. And just for the honourable members to know that, of course, we take into account South Africa's kind of demographics, and in terms of just a breakdown, if I can be allowed, we have 78% of the bursars are African, 8% are coloured, 8% are Indian, and 16% are white. And that just gives you an idea. From a spend point of view, we spend between 25 and 30 million just on our bursary program, which, as you can see, is quite extensive. And it covers, as I said, those areas. There was a question about why we only go to provinces twice a year. Let me just say that we actually go to the provinces much more than that. We have a high school student program that we work with. My colleague Witness was on earlier. We work very closely with our economic research department in particular. And we go to all of the provinces where we get high school students to participate in what we call a mock MPC. So honourable members will know the governor does an MPC every 2 months where we provide an overview of the economy. And of course, everybody waits for the moment when the governor says interest rates are up, down, or we're holding rates. So the high school students get an opportunity to actually be the MPC. As I said, we go to all the provinces, we cover including rural areas. And this year we reached just over 400 schools. The winning school, all of them came from a school in Midrand. It was Midrand High. All of them receive a full scholarship from the South African Reserve Bank as the winning team. And then, of course, the other teams kind of get different prizes as well as support that we give to the school. I'd also like to point out lastly that we have a program that the staff of the SAR participate in, where we support schools that cater for learners with disabilities. Again, that program is across that program is across all of the provinces. So we support a school in every province dealing with disabilities, and to emphasize that the programs are run in public schools. I think it's really, really important. The Monetary Policy Schools Challenge for high schools, we have involved IEB schools, but all the other programs and our bursary programs are all focused at public schools and learners coming from public schools. Thank you very much.
right. Am I audible? Yeah, thanks. Yeah, good afternoon, Chairperson, members of the Select Committee. I'm Sean Rayfield. I'm from the National Payment System Department of the South African Reserve Bank. We are responsible for not only the regulation, oversight and supervision of the national payment system and its participants, but we also own and run the domestic settlement system in South Africa, and then also run the regional settlement system on behalf of the central bank, the CCBG, which is the Central Bank Committee for Central Bank Governors. Okay. Just with regard to the question on expanding digital payments into the rural township areas. So the payments at this stage are still the domain of banks, with some exceptions allowed for in the National Payment System Act. However, we are looking at expanding that to non-bank participants, and we are in the process of developing a directive around specific payment activities within the national payment system, which will allow for non-bank participants to participate in the national payment system with exceptions. So they will be allowed to issue e-money products, be allowed to issue digital wallet products, but also allowed to accept these. The directive is being finalized. We actually having a session this morning in the bank with the internal stakeholders, our legal colleagues, our colleagues from the Prudential Authority, etc. Whereafter, probably in about 4 or 5 weeks' time, we'll be issuing the directive to the public for consultation. We're hoping that this directive will then be implemented around about June 2026. So the directive allows for the non-bank participants to participate in the national payment system with very limited limits. So it makes it easier for your non-bank participants to be part of that program. And with that, we're hoping to then advance digital payments within not only the township rural areas, but across South Africa, and also not to displace cash, but to have an alternative to cash, which is, again, cheaper, which allows for financial inclusion, etc. So we're hoping that with this directive, we will expand services.
Okay. So, Chair, if I can maybe return on my side to answer some remaining questions. So firstly, I want to get back to global growth. So global growth at the moment is below its long-term average of around 3.5%. And that is for a number of many different reasons. Some of it is the fact that countries that used to grow very fast, like China, that has in the past grown at levels of around 10%, is now growing closer to 4%. And that is an element that is slowing down global growth due to the size of that economy. European economies that are advanced economies that have had fair growth in the past are experiencing particular challenges. Some of them relate to what is happening to their manufacturing sectors, and that is slowing down growth. Economies such as the US that have been growing strong are still growing at acceptable levels, but lower than in previous years. So it is this combination of factors that is slowing down global growth. Tariffs have, of course, been a big area of discussion, given the decisions that have been taken by the US administration. So what we do as a South African Reserve Bank is we endeavor to understand what the direct impacts of tariffs can be and what indirect impacts can be. Now, when you're a central bank and you have some modeling tools that you can utilize, it does help you if you have certainty on what is the final decision. But the way in which the tariff engagements have happened is they are initial announcements, and sometimes those are implemented, sometimes they are rolled back, and there are trade negotiations that are underway. So it is very difficult at this moment for us to can fully map out what the full extent of impact of tariffs will be. The work that we have done internally has looked at what is the percentage of our export basket that South Africa sends over to the United States, and what will the impact be. So that is what we are able to do. But the nature of the tariffs at the moment is such that these are not only tariffs on South Africa, they are also tariffs imposed on other countries that are South Africa's trading partners. So that means that there will be both direct and indirect effects. But at the moment, we are unable to fully map out what those indirect effects are likely to be. So every time the Monetary Policy Committee has been meeting, we refine a number of scenarios. But scenarios by their nature are qualitative because there's a lot that we don't know. And every time we are getting new information, we update those scenarios. So based on the information that we have at present, our assessment is that the direct impact of US tariffs on South Africa is not very large because the bulk of the exports to the US from South Africa are a small subset of manufacturing. Some agricultural goods will be affected, but it is not very large in terms of the impact on our GDP. But these are all qualitative factors. As I say, every time we get additional information, we are able to map that out. But please bear in mind that some of our largest trading partners are being adversely affected. So China, in addition to SADC, is the largest single country trading partner to South Africa. That does have an impact if there are more tariffs on China. The tariffs that affect the rest of the SADC region will have implications also in terms of just the GDP growth of those trading partners. Europe as a region is also a large trading partner to South Africa. And so we are monitoring what is happening in those jurisdictions as well. And this is an area that we will continue to share work with the committee. What we will do at the end of this meeting is we will share some of the scenario write-up that we have that is currently on the website of the South African Reserve Bank, but we can share those links directly with the committee. So generally on our side, we are very neutral in terms of what we say about tariff decisions of countries, because these are sovereign choices. So in the same way that the US makes its choices and decisions around tariffs, South Africa also makes its own choices and decisions around tariffs. And that falls within the work of the Ministry of Trade and Industry. So in terms of what can be done related to tariffs, a lot of it does not fall into the control of the South African Reserve Bank. It will fall within the control of the rest of government. What we would look at is what could the impact on inflation be? So because these are tariffs that are imposed by the United States and they are tariffs that are imposed on a number of goods, they will likely have the effect of increasing global prices of certain goods. So what that might mean for South Africa's inflation is that there might be certain categories of goods that we are importing that might have higher prices, and that's what the MPC tries to estimate, to say, are there certain types of goods that might be affected by tariffs that would have an impact on inflation? But the broader impact on inflation, if global goods prices are higher, if trading among countries is lower and that results in lower global GDP, is it might have an impact on global investor confidence in general. And that's something that's very difficult. That's a qualitative element, but this is something that the South African Reserve Bank keeps its eye on in terms of what is happening to investor sentiment globally, as well as what is happening to investor sentiment in South Africa. I hope that assists honorable members. Just to close the loop on just one question that was raised around administered prices and the contribution of municipalities. Again, this is an area in which the SARB will be having engagements with multiple stakeholders on. So we have a stakeholder program that includes various price setters, and some of those price setters would be in the municipal space. Again, we cannot fully tell price setters what to do. But through the actions of the South African Reserve Bank and the communication that we put out about the importance of having low inflation in the economy and sharing some of those insights directly with price setters, this is how the South African Reserve Bank seeks to be influencing municipalities, among others, in terms of their price setting, so that they have an understanding on how their pricing decisions have an impact on overall prices in the whole of the economy. Because municipal property rates, water prices, electricity prices feed into other prices in the economy. They feed into wage demands. All of us have to pay municipal property rates in some form or the other. So when we go to our employers to ask for wage increases, that does have implications. Honorable Swart, you ask some deeper questions around the toolkit that the South African Reserve Bank has, which is, well, how do we look beyond this repo rate to support inclusive growth in South Africa? And the SARB in its toolkit has got a number of other areas through which we influence what happens to the economy. We, of course, think that having low and stable inflation is important. Firstly, in terms of the impact on household, we think that low inflation is especially important for the poor who do not have additional income sources. So if you have stable inflation and prices are stable and they're not rising too fast, the same 10 Rand that you had last year will buy you a similar basket of goods today. And that is especially important if you don't have additional income sources. So we do think that this is especially important role that the South African Reserve Bank plays. The second important role that the South African Reserve Bank plays in terms of its other toolkits is Sean spoke about payments. So having accessible and affordable payments is an area that we are doing more and more work around. As you know, crime is also an area in which if you are holding on to cash, you're quite vulnerable in terms of crime. The work that we are doing in terms of payments, we think is going to be an enabler for small businesses in terms of doing their business safely, in terms of households having less cash in their pockets if we have near cash solutions, so that if someone is paying you and they say, I have paid you, you can verify immediately. So we launched together with BankServe, PaySharp a few years ago. And the idea behind PaySharp is to have something that is near cash, which is an instant payment mechanism. And PaySharp for certain amounts below certain thresholds is free in terms of the transfer. However, the idea is that you have got payment mechanisms where we are more trusting. Fundi doesn't say, I've made a payment to DG Mampo here and DG Mampo is still waiting for 2 weeks. If you have a fast payment system, while we're sitting together in the room, the money should have arrived and we'd be able to verify. And we think that this is something that is important. As Sean highlighted, we are continually refining what it is that we're able to do so that we can improve access across for all South Africans. The other area in which the South African Reserve Bank contributes, of course, is having a sound banking system so that if you take your last rand and you've deposited in a bank, you have to be able to sleep better at night, so that if your deposit is in the bank and it is your last bit of cash, you have to have the assurance that your funds are safe. And this isn't a way that we think we contribute. We cannot, Honorable Swart, however, be doing the same things as the rest of government. So there are things that we are very good at as a central bank, but there are things that we are unable to do, which is to make up for the gaps in the rest of the government system. Our approach is rather to be influencing what it is that our sister government departments are working on. There are areas that require competitive intervention. There are areas that require grants to be provided to assist households. And these are things that the South African Reserve Bank does not have the competency to do. And hence we see ourselves having more of a complementary role to what else government is doing, rather than being the one that will provide specific solutions. In addition, we also do not have, outside of the financial sector, we also don't have sector-specific interventions. So we cannot say, as the South African Reserve Bank, this part of our work we're doing for rural communities. We provide a benefit for the whole of South Africa, and I think that there are benefits to different segments of society through that holistic approach as well. I hope that that does assist. There was a question that was asked around the dominance of the large banks. The best way to mitigate dominance is to have competition. So there is no fixed number of banks that we have in the country. At the moment, we have 27 registered commercial banks and branches of foreign banks. We have got other types of deposit-taking institutions. So anyone who has got the sufficient capital to assure us that if you put their money, your money with them, your funds will be safe, they'll be able to receive a license for deposit taking. But we are seeing that the more financial institutions are coming onto the system, the lower the dominance is becoming. And we are also seeing that it is also lowering bank charges, which is a question that Honorable Cesar asked earlier about what can be done about these high bank charges. What we are seeing, Honorable Cesar, is that as you get more competition, bank charges are coming down, and that is the role of competition. And competition does that better than we are able to do that as individual supervisor. We do have other authorities like the Financial Conduct Authority who look to ensure that customers are treated fairly by their financial institutions. And the Competition Commission is doing a body of work in this area as well. I hope that assists. And the last area I will touch on relates to how competitive our bond market is. In our view, our bond market is highly competitive. So what affects the competitiveness of a country's bond market would be a country's credit rating. It would be the liquidity of the markets. It would also be it would also be the compensation that bondholders get in the form of yields. So yield levels in South Africa are fairly healthy. So that's one tick. Our markets are liquid. That's another tick. So the only downside you would say is that we no longer have investment grade credit rating. But what we are seeing is that we still remain competitive when we compare ourselves to some of our peers. This is the feedback that we also get from bond investors that are foreign bond investors. We did see when our investment grade rating was removed that there was a slight decline in the number of non-resident bond investors, but the levels remain healthy above 20% at the moment. So, Chair, I hope we have answered most of the questions. So if I can hand back to you for reflection, and then Deputy Governor Mampo Modise will close the session for us.
Thanks very much, Ms. Gaza. I don't see any other hand from honorable members. I'm not sure, Ms. Gaza, because you spoke of Deputy Governor to close the session. And I think one area that was very much important that you also indicated to us is that you'll be able to share the scenarios with the committee. And I believe that we'll also be able to request you to come and do the presentation again, because you can see that honorable members are very much interested in the presentation, particularly that you also wanted to hear is the role of the bank ombudsman. But I think it's one of the questions for the next session that you, when you come, you will be able to also brief us about and also assist the committee. Can I check with the Deputy Governor?
Thank you, Chair, and thank you, honorable members. Yes, we will then await for the letter from the committee of when we will be coming. And because the committee has been so interested in what we do, we will bring the teams that will talk to the specific topics. We will also make sure that all the documents we committed to giving the Secretariat, we do that immediately after this meeting, so that at least honorable members will have that information. Thank you so much, Chair.
Thank you, Doctor. Thanks very much, honorable members, delegates from delegates from South African Reserve Bank. My apologies. With that, as we bring this meeting to a close, I wish to express my sincere gratitude to the two deputy governors and the entire South African Reserve Bank team for their comprehensive and insightful briefing today. I'd like to request the delegation and the governors to release. Thank you very much. You can leave the meeting so that I can stay behind with the honorable members, because there's another in-house matters that we like to discuss. Thank you very much for your presentation, and we hope to see you next time.
Thank you, Chairperson. Thank you so much, honorable members.
Secretary, I hope you indicate if all the team from the South African Reserve Bank has left the meeting, so that we can just deal with our last matter for the oversight.
Yes, Chair, they've exited the platform.
Thank you very much. Can you now hand over to your good self, Secretary, to brief us on the oversight that to Northwest that will be embarking on next week? Thank you.
Okay, thanks, Chair. I will, if you allow, Chair, I will ask my colleague Esther to kickstart, then I will come after her. Thanks.
Okay.
Thank you, Nkululeko. Good afternoon, members and colleagues on the platform. I'm going to take the members through this document. It's very short, and I'm assuming that the members had an opportunity to at least browse through it. This is in preparation for the scheduled oversight visit to the Northwest Province next week. As a way of motivation and background, just to indicate or remind members that this is coming from the committee's legacy report. One of the recommendations was that the committee in the new term should interact more with the AG, cooperate more with the provincial committees, and organize visits to the provinces. And as part of adopting that recommendation, the committee started engaging with the provinces again. We have met with National Treasury, the Office of the AG, the Provincial Treasuries, and the MEC of Finance in this instance. You can keep scrolling, Nkululeko. The purpose of those engagements, amongst other things, was to better understand the provincial, legislative, and other issues that require the committee's representation in the national sphere of government. And from the engagements with regards to the audit outcomes of the Northwest Province, one of the things that came out was that there are serious issues with audit outcomes in the province, not only in Northwest. For now, I'm just going to focus on Northwest. These are transversal issues though. So amongst other things, in the last audit cycle, which is 2023-24, only 3 of the 13 provincial departments received clean audits. Please scroll down to the entities. And also, I'm going to be skipping certain paragraphs because members, we have compiled a consolidated, a comprehensive report which was adopted and considered by members last week. So some of this information will be in that report. But from the public entities point of view, it emerged from the discussions that there are serious issues with public entities in the province as well. Overall, the audit outcomes in the province have regressed. In 2023-24, none of the entities received clean audit outcomes. You can scroll down. What also came clear was that the financial affairs of these entities were not managed properly. The Northwest Development Corporation in particular, and the Golden Leopard resorts. And on governance, we've got to, it became clear that only one entity, the Mabana Arts, Culture and Sport Foundation, was the only entity with a substantive board. And only 2 of the 6 entities had substantive CEOs, and none of the entities had substantive CFOs. By that, we mean some of them or most of them are operating with acting CFOs or acting CEOs. Scroll down, and yeah, these are some of the findings that came out of the engagement with the Northwest Province. Because we have already adopted the report, I'm not going to go through them. Yeah, but they are listed there for ease of reference. You can scroll down through them, all of them. And then after engaging with the province, the committee took a resolution that we should go to the Northwest Province. The date scheduled for that is 20 to 24 October to monitor progress made on observations made by the committee. And we have a proposed objective of the oversight visit. I will not read it through. And then we have a summary of proposed projects for oversight. I am also not going to read this out because the committee secretary Nkululeko will give a detailed discussion of the itinerary of this visit. So yeah, those are the proposed projects for day 1 and for day 2. But basically, the idea is that in day 1, we engage all the 6 public entities of the Northwest together with the line departments and MECs, the Provincial Treasury and the Office of the AG. And then in the second day, we do 3 infrastructure project visits. So I will end there and hand over to Nkululeko to take us through the program. Thank you.
Can I go ahead, Chair? Hello, Chair, can I go ahead?
Yes, you can. Oh, I was trying to unmute myself this side. You?
Oh, yes.
Continue, Secretary.
Okay, thanks, Chair. Good afternoon once again, members. So the plan is to take flights on a Sunday. I just communicated with the person who's dealing with the logistics. She is managing to get flights from Cape Town around 9, between 9 and 12. As members would know, the distance between OR Tambo, you are looking at about a 2 to 3 hour drive. So far, as per the quotation that we received, Protea Hotel Mahikeng seems to be the cheapest. As you know, government is using a 3-code system, then takes the cheapest. Perhaps I should also indicate to the committee that the political application is with the Office of the Chief Whip currently, and it's still going to the Office of the NCOB chairperson. But we anticipate an approval at least before Friday so that we can start issuing out tickets and warrants. So as mentioned by Esther, on the first day, the committee will be having a site visit at one of the Golden Leopard Resort that is in Mahikeng. It's called Coke Lake Resort. That will be in the morning. That is the inspection in loco. After that, the meeting will start. We are still looking at having this meeting or a conference facility at that Golden Lake Resort to avoid the traveling that will happen between the hotel and Golden Lake, Golden Leopard Resort and back to the hotel. But I am still waiting a confirmation for that. However, we do have a plan B in an event that fails. We still going ahead with the codes for the conference facility at the hotel where we are going to be staying. As mentioned already by my colleague, these are the departments and entities we are planning to invite for that day. And these are the entities that the committee will be meeting that day. We anticipate that it's a meeting that will take the entire day. That's it for the first day. The second day, we are visiting 3 projects, as mentioned already. The first project will be Mahikeng Airport, where the focus will be on the upgrade and renovation of the airport. It was also flagged by the Auditor General in one of the presentations they gave the committee. but that should take the committee up until around 12. We have a lunch. I must mention to members that the lunch might be on the way, be it members grab sandwiches or we go to Spare or McDonald's, but it will be a working lunch as we will be chasing time for the next project. But the next project is also in Mafikeng as well, which will be Mabato Nurses College. It's one of the unfinished and delayed projects as flagged by the Auditor General. We've already informed the departments and the committee that deals with health and the other one that deals with public facilities. And then we departed to the last project, which is the rehabilitation of the road between Lichtenburg and Galaspan. My apologies for butchering that word. But we've also informed the departments as well for that particular project. That's it for the oversight of the Select Committee on Finance. We anticipate we will be back at the hotel around 7:30 to 8. That will be all for the Select Committee on Finance. The following day, it will be the Select Committee on Appropriations. I've already spoken to my colleague that side. Tomorrow they will be doing a similar presentation to the very same members. Thanks, Chair. That's all from my side.
Thanks very much. Thanks very much, Secretary and Content Advisor. Can I check if there is any question from honorable members? Those were the logistics for our oversight on our SWAT.
Chairperson, I really thank you very much for the detailed program, also for the briefing documents. I really want to ask, if we go out, it will be our first oversight, outside the Western Cape. But time management for me is always very important. Please, I just want to ask that we manage our time, and also that I think the Secretary just said that we will get our exact time, and flight tickets by Friday, so that we exactly can know what time the flight is on Sunday. But thank you very much. I'm just always cautious about the time management when we go out on visits. Thank you very much, Chairperson.
Thanks very much, and I believe Honorable Rada will also assist us to fast track the process with the House, our chairperson of the NCOP. So we also counting on him on the. Yes. And I think that's it, honorable members. I don't see any hands up to so far, and this then brings us to the end of our meeting. Thank you very much. It was
Chairperson, I just forgot, Chairperson. Sorry for that. Must we take our black suits with, or our official can I take techies and short with? How's the weather that side? I just want to know. That's also very important what we pack.
Is Honorable Lokhas is not here, she left. Okay. Ngululeko, will you be able to assist there? On the
Chair,
anyway, let's say you might take something warm just in case. Yeah. Honorable Lokhas. Okay, that's it. I think all our members will meet there at the chamber. Please, thank you very much for your contribution to this select committee. It is indeed it was very informative session that we had earlier with the Reserve Bank, and now we were able to finalize the program for our oversight. And then thank you very much, honorable members. The meeting stand adjourned. Thank you.
Thank you, Chair.
So, Jolisto.